Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Sunday, April 16th, 2023. Hope you guys are having a fantastic weekend, and let's get started. We saw the S&P pull back a little bit on Friday, nothing major. At one point, what I had put in the morning notes was that I'm not really looking to trade right away. I still think that this needs a little bit more of a topping process before it's gonna, the top is in place. And one of those things may be coming up and testing this high or breaking through it, where we start to set up some pretty good sell signals. But what I had said in the morning notes on Friday was that, if I was going to be forced to trade, I would be looking to short, but I would not short until we got up to the 4160 or higher. So we got up to the 4164, and from there we just saw all out selling, and it was almost a 50-point drop from there, and then we rallied. So we're still kind of in this where the bulls are buying the moving averages right here. So this is obviously what the bears are going to have to get through, one of these moving averages, just to kind of show that they mean business. And until that, the bulls are going to continue to try to bid the tape higher. So right here, this 4113 level, you can see the 200-day moving average on the 15-minute chart is at 4105. I think it's going to be moving up because each day it moves up on this as long as we're above it. And it's going to be used as good support down at this at the 41 12 area, where it will be price support as well as the moving average. So that's this is going to be the really important area for the Bears to break through, to even begin to believe that they're going to be giving it a go to the downside. So if they do, you can see here that we have some really strong support at the 4092. And if we look at the 60-minute chart, you can see here this 4108. So they're buying the 200-day on the 15-minute chart, but what's happening is that on the 60-minute chart, they're using the 50-day. So this is their area, and this is typically when we start to see sentiment spikes, bullish sentiment spikes, just like we saw here, where they didn't let anybody out. They caused a big short squeeze, and then from there, they let the market drop. And so it's the same type of pattern that we're in right now. And that's why I'm just saying, you want to be a little bit conservative as far as shorting, because we could still see this 4200 or possibly even 4300. So we're oversold right now. Obviously, the upside resistance 4163. If they get above that, then the bulls have a clear route up to the 4200. The bears, as I just explained, they're going to have to get it through this right around that 4111 level. If they do that, then we should see a test of the 4085 level, and then down at the 4045. So that's really, there's not a whole lot to go over here. We're starting to see sell signals here. So it's, and we know time wise that, the bulls are on borrowed time. So this is, we closed out our long positions. We're waiting for the proper setup to look short. And then just as everybody starts getting really, really bullish on this market, we'll be able to use their shares to short the market, and then wait for it to roll over. So let's see what plays out tomorrow. Have a great rest of your weekend, and I'll talk to you guys in the morning.